Hey, this is Matt from InvestiQuant. Today is Tuesday, June 22, 2021. Yesterday was a strong day for the markets. We saw what market profilers would call a short covering rally, and that's based upon the shape of the market profile session. So in market profile, if you see a session that makes a profile that kind of looks like a P, and that's where there is strong buying early on, followed by consolidation up near the highs, that is considered a short covering profile. We had that take place yesterday, and there's a way that you can kind of describe that action here in Discover. We're going to be looking at that this morning. So let's go ahead and set it up and add a little bit more context around what we are seeing so far. So I'm going to select all four instruments here. The setup's based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, currently, we're trading pretty flat in the overnight session, so I'm going to add that information to the test here as well. So I'm going to say that the gap size as a percentage of the 5-day ATR is less than 25% of the 5-day ATR. Now, for the S&P, the 5-day ATR is currently 48.4 points. So we have seen a little bit of volatility come back into the markets after a quiet period. And 25% of that would mean a gap in either direction of about 12.25 points for the S&P. So I've got that in here. I don't have a gap direction. This is something that you probably will want to come in a little bit closer to the open and add that information gapping up or down, because that will make a difference. But I do have that it's going to be a small gap in either direction right now. Now, next, I'm going to hop into the price patterns library, and I'm going to say that we closed up near the highs of the session. So I'm going to go to the active today section to grab this, and I'm just going to say that the close was in the top 25% of the daily range. That comes from the location last open and close category. And then next, I'm going to go into the profile patterns. This is market profile patterns that we have available in here. And I'm going to say that the point of control, which is referencing the price that was traded the most throughout the entire session yesterday, that was in the top 25% of the daily range. So that's something that you would see fairly often in a P-like profile, P-shaped profile, or what is referred to as a short covering rally in the market profile. So let me come over here to the POC placement. Where is the POC relative to key levels? And I'm going to say that it is in the top 25% of the daily range. I've got that selected. Next, I'm going to go into indicators, put us in a similar market environment. We are above 10, above a 200, and now I can click View Results. And here we go. These are the results based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time, when the prior session had a close in the top 25% of the intraday range, and the most traded price throughout the session was in the top 25% of the intraday range as well. This is taking place above a 10 and above a 200, and it is followed by a flat-like open, and I've described that flat-like open as anywhere within 25% of the 5-day ATR. So it doesn't necessarily mean it's opening exactly where it closed. It's just it's not pushing too far away from the prior session closing price. So we've got 125 samples in the S&P dating back to 2003. We've got 153 in the NASDAQ, 105 in the Dow, and 155 in the Russell. And the win rates on them are really nothing to be too impressed with. The NASDAQ's the only one that is favored. You got the S&P coming in at 47, the NASDAQ coming in at 63%, and then you've got the Dow at 50 and the Russell at 49. So only one of those favored. The others are very neutral. But if we look at the average win and average loss, you will see the average loss is larger on all four instruments. So S&P, larger average loss, as is the NASDAQ, which has the favorable win rate. And then Dow, Russell both have average losses that are larger than the average win. So on an end-of-day basis here, not a whole lot to be too excited about. The NASDAQ's the only one that shows somewhat favorable win rates. But, you know, on these types of days, I'm often looking for different types of biases as well, and potential trade setups early on, like a gap fade. So let me go ahead and just show you real quick. We are trading a little bit higher right now. So I'm going to go ahead and say that we're trading higher in the opening locations. I'm going to hit gap up right here, and then I'm just going to change this to a gap fade. So I'm going to go simple in settings, change the trade type from long to a fade. So a fade on a gap up, which is what I just added to the test, means it would be getting short at the open. And then I'm going to target the prior closing price for this test. So I'm going to hit on the target. I'm just going to hit prior close there, and then I'm just going to throw a stop on here, an intraday like stop. We'll use 40% of the 5-day ATR. You can kind of fine tune this on your own. And again, I did add gap up. That's currently where we're trading at the time of this recording. We're up a handful of points right now. So let me go ahead and put a minimum gap size in here just to get rid of the ones that might be exactly flat. We don't want to be testing days where there's like a one tick gap. So let me put in a minimum gap size of 5%. That's going to mean that it'd have to be at least 2.25 points or so, but up to about 12.5 points for a gap location this morning, and it needs to be up for this test. Now I can hit view results. And here we go. These are the results based upon entering the market short on an up gap of at least 5% of the 5-day ATR. And again, today, that's going to be roughly 2.25 points or so for the S&P, and as large as a gap of about 12.25 points today, which would be about 25% of the 5-day ATR. So it needs to be somewhere in that range on an up gap when the prior session closed in the top 25% of the daily range, and the point of control finished in the top 25% of the intraday range, taking place above a 10 and 200-day simple moving average. So this is a 40% stop. Today, a 40% stop is 19.25 points or so, and then the target would be the prior close from yesterday's session. So you can adjust that sort of stuff here in Discover. You can adjust that stop. You can make it tighter. You can make it bigger, whatever suits you best. But historically, this one now has a 57 samples, since we're just looking at this up gap specifically in the ES. The NASDAQ 64, the Dow 47, and the Russell 62. And if you look at stats on these, you'll see they get quite a bit better. Now, this is not necessarily something you would want to trade mechanically, but it can put an idea in your head that, if we're gapping up, these stats here are pretty strong. So maybe gap fades this morning, looking for a little bit of mean reversion would be a good idea. The S&P on this setup has an 84% win rate historically, dating back to 2003. You can see the NASDAQ coming in at 69%, the Dow 85%, and the Russell 76%. The S&P is the only one that has good stats kind of throughout. You can see a nice, strong average trade, whereas the NASDAQ, it's more neutral there. There's not really an edge for this with the NASDAQ. But maybe if you adjust the stop, adjust the gap to be a little bit closer to what we're going to be seeing when we actually do open, those numbers could get even better. So this is just an idea to throw out there. Again, you can play with that idea on your own here in the opening filters. If we gap down, you'll want to change that and rerun the stats again, and you may want to play around with the gap size once we know exactly where we're going to be opening. But that's just an idea if we're opening up with a gap that's between this price range between 2 and 12 points or so today in the S&P. Historically, that's been a favorable gap fade like setup. So hopefully you found that helpful. Good luck today, and we will see you next time.